Hey friends, it's Tony from Tax Res Group, and today we're going to answer a question I get a lot, which is, how do I reduce my income? Well, you don't want to reduce your income, you want to reduce your taxable income. There's a difference. The most common way to do that is to invest in yourself via 401k. If you work for a W-2 employer and they have a 401k program, I highly suggest contributing as much as you can afford as soon as you can afford to do it. The earlier you start, the more money you'll have at the end, and you won't have to work at Walmart in your 70s to make ends meet because your Social Security isn't enough and you just didn't save. I would conservatively say if you are under 50 years old, you want to look at having $3 million to retire comfortably, especially if you live in a state like New York, California, and a few other expensive states. Now, if you live in other states where cost of living is not that high, maybe $2 million you can get by. And what do I mean by that? People always talk about, well, when I retire, my bills are going to be less. Well, why is that? Are you going to stop going on vacation? Are you going to stop buying clothes? Are you going to stop going to the grocery store? Your bills are going to stay the same. In fact, I would argue your bills are going to go up. I'll give you an example. My mother-in-law, who is 91, is in assisted living, $10,000 a month. And that doesn't count her medicine and hearing aids and new eyeglasses and all these other specialized things that they need. Some is covered by Medicare, but not a lot of it. She's spending more money now than she did when she raised 3 children and was married and had her own home. Why? Because as you get older, your costs go up. They don't go down. So if what you want to do is say, okay, how do I reduce my income today, taxable income, and provide for myself in the future? 401k is a great way. Now, those of you that are self-employed would say, oh, but I can't do that. Haha, you can. You can do what's called a solo 401k. Financial advisor can set that up for you to where you have a 401k just for yourself. That's the name solo. And if you're under 50 years old, you can put in $23,000 into it every year. Here's the best part. If you pay yourself W-2, you can contribute a company match up to 25% of your W-2 wage. I'll give you an example. My corporation, I pay myself $100,000. I take $23,000 of that and put that into my 401k. My company then takes $25,000 of company money and matches 25% of my $100,000, giving me a total of $48,000 of contribution into my 401k. And that is something nobody who is W-2 for a company other than their own can do, because no company will match you that high. Usually it's 2 or 3%. So a great way to save for yourself. And you always want to invest in yourself before you invest in other things like clothes and toys and boats and cars and planes and trips. All those things are depreciable assets. They do not serve you well long term. You are an appreciable asset. You should get better over time. You should be worth more money over time, more value over time. How do you do that? Invest in yourself. As you get raises, if you're not contributing the max of your 401k for your age, now I'm over 50, so I get to put $30,000 in. And I make it a point, both my wife and I max our 401k, and then my company, of course, matches 25% of my W-2 wage. We're putting together almost $90,000 a year between the two of us into 401k programs. Well, 10 years of that's $1 million. Life is good. By the time that 10 years, it should double to $2 million. So when we retire, we'll have enough money to go on trips, to do whatever we want, and not be bound by, oh, I hope I get my Social Security increase. Or I hope Medicare doesn't raise my pricing. It won't matter. You'll be set for life because you invested in yourself. I tell people this all the time, especially young people. Don't let your older self hate your younger self for screwing away all the money that you should have been saving. Tax is like discipline. If you want to pay the least amount of tax, you need to find tax-advantaged avenues. 401k is the most common way to do it. There are other things like a Roth IRA. Roth is an after-tax program. I always recommend having both a 401k and a Roth. Why? Currently, looks like taxes are going to stay where they are, maybe even come down. But that doesn't mean in 4 years they're not going to go up again. So why not hedge both sides? Hey, I don't want to put money away in a low 20% tax bracket and then when I retire have it be a 35% bracket. That kind of defeats the whole purpose. So you want to put money in a 401k, you also want to hedge your bet, pay some tax now just in case taxes go up, and have a Roth. And while we're on Roth, I want to talk about two big differences. In a 401k, you have to start taking distributions when you become 72 years old. They're called RMD, required minimum distribution, roughly about 4% of the value. You don't have a choice. A Roth, on the other hand, you don't ever have to take a distribution. You can use it, not use it, and it's a very important part of a tax strategy. Think about if you need $100,000 in retirement. Are you going to take it all out of your 401k and pay tax on $100,000? If you had a Roth of similar size, wouldn't you take some out of the Roth and just take the minimum out of the 401k to minimize your tax? I would. And once I got to the minimum distribution, okay, I have to take the 4, but I'm going to make up the balance if I have enough in my Roth so I don't pay tax on it. Roth is completely tax-free because you paid for it already when you put the money in. So 2 schools of thought, always better to hedge your bet. I don't believe in all your eggs in one basket. I believe in diversification and tax strategy. I don't have a crystal ball. If I did, I wouldn't be here. Obviously, I'm here because this is what I think, not what I know. But what I do know is eventually everything goes up. Anybody seen the price of eggs lately? I think it was $10 yesterday that I paid for 12 eggs. Man, I gotta buy some chickens. Anyway, if you have any questions, give us a call, click the link below, leave your comments. We try to respond to as many as possible. I look forward to seeing you all next time.